Hello friends, we'll be discussing an illustration which is related to reissue of shares. This will be a comprehensive problem. Rather, we won't be discussing this at a length. However, we'll be discussing only the share forfeiture details and the reissue and calculation of the share forfeiture balance which has to be transferred to the capital reserve account. So when we're talking about a short comprehensive problem, this specific problem is discussed, or rather is supposed to be discussed only with the motive of understanding that how any problem that is dealt with or has to be dealt with only in certain matters, because in your exams you'll be having MCQs and you won't be having that much of time to draw the pattern or rather to draw the tables and go ahead with the calculations. So right now we'll be doing only certain examples. Rather, there will be certain different situations that will be given to you and we'll be finding only the calculations part of it. So let's start with that. So the first case situation is, or rather will be discussed right now. Now the question states that Mr. X is a holder of 1000 shares who didn't pay rupees 2 and rupees 3 of the first and final call. Now this case situation says that the first and final call was not paid here, hence his force, or rather his shares were being forfeited here. Now, the question also states that his complete shares were forfeited and they were same reissued to Mr. Y at rupees 8. In all these case situations that we'll be studying right now, you'll have to prepare the capital reserve balance as well. That means all the share forfeiture balance after adjusting all the loss here or any kind of profit that we have to adjust when it comes to reissue. You have to go ahead and make sure that this balance is transferred to capital reserve account. Let's go on to the case 2 now. Now, case 2 will refer to Mr. Long, who was the holder of 2000 shares here. Now, the second and the last case that we have to discuss here is about Mr. Long, who had around 2000 shares with him and he couldn't pay the allotment and first call money being rupees 25 per share. The total called up value was somewhere around 75 rupees as it has been mentioned in the question. The directors went ahead and forfeited these shares and then reissued 1500 shares out of the 2000 forfeited shares to Mr. X and then went ahead with reissuance of rupees 65 per share, the paid up value being 75. This is a little different as compared to the earlier sums that we have done. The reason why this case has been mentioned in this specific illustration so that you can understand how the multiple choice questions are supposed to be, or rather will be appearing in your exams. So the time is now to understand case 1 and case 2. So let's start with the journal entries of case 1 first. So the first case that we'll be studying here is about Mr. X, who holds around 1000 shares. Let's start with the journal entry of that first. Now when we're talking about the case study, we'll be directly starting with the share forfeiture entry because that is the only journal entry that we have to discuss, and after that we'll be going ahead with the specifications of reissue. So let's start with the forfeiture of case 1 first. So the entry that we have mentioned here is share capital account debit to share forfeiture to calls in arrears. Share capital will refer to number of shares being forfeited into called up amount. As they have mentioned that this is the final call that they have called up, that means we'll assume that the whole amount of rupees 10 has been called up. The reason being that has been mentioned in the question. Now, the call scenarios will refer to the allotment, or rather the call scenarios will refer to the amount which hasn't been paid up by him. That means rupees 2 and rupees 3, total of rupees 5 which hasn't been paid by him. So that will be 1000 into 5 rupees. So clearly that states that out of 10,000, if 5,000 hasn't been paid, the balance 5,000 has been already paid by him in terms of applications, and that will be our share forfeiture balance. So our share forfeiture balance has an account, or rather share forfeiture account has a balance of somewhere around 5,000. Now the second entry of this specific case will refer to the reissue of shares, all 1,000 shares at rupees 8 each. So the value of that share was total of 10,000. You are reissuing that share at 8,000 in total. The difference between that face value and the reissue price is 2,000 here. That will be paid by the share forfeiture account. So let's pass the reissue entry here. So the reissue entry is bank account debit, share forfeiture account debit to mention the loss here, and to share capital will be credited. So share capital will have 1,000 into 10 because the face value still remains rupees 10. Bank account will have the reissue price, that means 1,000 into 8. So the difference between 1,000, or rather 10,000 and 8,000 is 2,000, which is paid by the share forfeiture account. So the opening balance of share forfeiture was 5,000. If out of 5,000 you have utilized 2,000, that means the balance that you're left with in share forfeiture is 3,000. That will be moved to capital reserve. So the last entry for case 1 will be share forfeiture account debit to capital reserve with the amount of 3,000 here. So case 1 has been completed here, where we have moved the share forfeiture balance to capital reserve as well. Now comes the complicated case, that is case 2, whereby you have to understand the difference between the paid up value and the actual reissue price. That will be the most trickiest part to understand. So let's start with the same thing right now. So even in case 2, the first entry that will be passing here is the share forfeiture entry. So let's pass that entry first, and then we can discuss on the other things of it. So again here the entry will be share forfeiture account will be credited, calls and arrears will be credited, and share capital will be debited here. So let's start with that. So the entry we have passed here is share capital account debit to share forfeiture to calls and arrears. Now, share capital account will have a total of being called up value. As in the question, they've clearly mentioned that the called up value being 75 rupees, 2,000 shares being forfeited. That means 2,000 into 75 will be the amount of share capital here. So 1,50,000 is the debit side total. Now on the credit side total, we have a total of, or rather we have a sum of calls in arrears. Here they've mentioned that allotment and first call wasn't paid. That means 25 each. So total of 50 rupees hasn't been paid on both the calls. 50 multiplied by 2,000 will give you a value of 1 lakh. So that is the total of calls in arrears, 1 lakh rupees. So the balance that will be left in the share forfeiture account will be a total of 50,000. Now, the next entry that will be passing here is the reissue entry. So let's start with that. Now, when it comes to reissue entry, in the previous case, we understood that the face value is the paid up value, or rather whatever difference we were taking was between 8 rupees and 10 rupees. Here, we cannot take the difference as 100 rupees or something like this, because in the paid up value, they are saying that the value of per share was 75, which was reissued at 65. That means the difference between them is 10 rupees that will be paid by the share forfeiture account. So if 1500 shares are being reissued, share capital balance will be 1500 multiplied by 75. Bank account balance will be 1500 multiplied by 65, and share forfeiture balance will be 1500 multiplied by 10. So let's pass the reissue entry now. Now, the next amount, or rather the next thing that we have to transfer, is the balance that is supposed to be transferred to share capital account, or rather capital reserve account, out of forfeiture. So let's start with that part. Now, before we could go on to the conclusion of transferring the amount, as there is a difference between the original face value and the made up face value here, hence we need to do certain calculations. So let's start with the calculation first. Now, unlike the regular balance transfer that we used to do, that is subtraction of the total balance that has been utilized from the original balance. Here we cannot do it like that, because the reason is we have multiplied, or rather we have mutilated the total balance of the face value and we have moved it to 75 here. So let's go through the calculation that we have derived. The first and the most important thing that we have to figure out is the forfeited amount per share. That means the total of forfeiture balance before reissuance divided by the number of shares that has been forfeited. So 50,000 divided by 2,000 will give you per share balance of 25. Out of that, the surplus that we have achieved, or rather the loss that has happened, either of the situation. In this situation, there is loss because the face value is 75, we are reissuing it at 65. That means 10 rupees loss has happened. So the difference between both of them, that means forfeited balance and per share loss that we have attained, that is 15 rupees is the balance that we have reserved, or rather 15 rupees is the balance that we have derived. So that multiplied by the reissuance of shares, that means 1500 multiplied by 15 will give you a balance of 22,500. Only that much balance will be transferred to capital reserve. The reason why is because we are not transferring the complete 2000 shares. Hence, the balance 500 shares also has its own part, and that has to be excluded because that is not being utilized right now. Hence, only transfer, or rather only balance related to 1500 shares will be transferred, and that will be 22,500 here. So make sure this calculation is kept very clear, because these are the only tricks and techniques that you'll be utilizing, or rather you'll be able to go through all the MCQs using all these techniques and tricks. So make sure all these techniques related to the reissuance and calculation of transfer, because whenever it comes to company accounts, you'll have all these kind of questions. You won't have basic journal entries itself, but you'll be having all technical aspects of all these calculations, and how better way, or rather the best way to clear out these calculations without using the paper or without using the pen, and just doing a mathematical calculation on it will help you in better resolution and effective resolution. So I hope this video has given you clarity about how to go ahead with the techniques of reissue, or rather calculation of capital reserve or transfer to capital reserve. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.